here today with Robert Futterman, the CEO of brokerage RKF. Robert, thanks for joining us today. Appreciate it.
Pleasure.
So it's an interesting time in the retail market, and in May, The Real Deal ran a retail special issue with this cover. In case you can't read it, it says "Retail is fucked." And this is based on a Billy Macklowe comment. The developer said, "Retail is fucked, plain and simple." What went through your head when you heard that comment?
I think Billy was confused. I think he meant that he was effed because he walks into his apartment every night and sees the lobby filled with net-a-porter deliveries. He must assume that nobody's shopping in retail stores. And I know Billy very well, and I think it's very tongue-in-cheek, but the truth is, he's not in the thick of the retail business the way we are. Mm-hmm. And the truth is, it's definitely not the F word.
So this whole notion that online retail is killing brick and mortar stores in Manhattan, that's overblown.
Oh yeah, it's not true. The studies have been done that show that online retailers that have a bricks and mortar presence are the ones that actually perform well. Online retailers don't really make a lot of money, maybe Amazon aside, but until they have a bricks and mortar presence, do they really see their sales increase by this sort of coming together of an omni-channel platform and a bricks and mortar platform.
So speaking of which, we're seeing more and more online retailers opening their own physical stores in Manhattan. Do you expect more of that? And what's the appeal?
Well, yeah, the great news about New York, about Manhattan, is it's the testing ground for every new concept. So the first Bonobos, the first Warby Parker, the first Untuckit store, now you're seeing a Dyson product store. These are the first. So it's the first of firsts. So New York is always the place that companies venturing into retail that may already have an omni-channel presence in the world now want to display their product in bricks and mortar so the customer, the consumer, the millennials who want to immerse themselves into an experiential shopping experience can see the bricks and mortar version of the product as opposed to just shopping online. So it is not what's hurting retail right now. I mean, it's a factor and it might be one of many, but it's certainly not the death knell for retail.
So if it's not the thing that's hurting retail the most, what is? We have vacancy rates over 20% in different regions. We have deal volume slowing down. What explains this?
Buyers paid too much, and tenants can't afford to pay the rent. Mm-hmm. So you have vacancy. So you're seeing an adjustment, you may want to call it, a correction, you may want to call it, but you certainly, see the amount of deal volume in terms of the retail business is not slowing, at least not for us at RKF.
So it's purely cyclical. There's no
Real estate by nature is cyclical, right? It goes up, it goes down, it corrects itself, there's absorption, and then we move on. You had incidents in New York like 9/11 and the Lehman Brothers crash, and New York is a very resilient town. Everybody sort of bounced back even stronger in those instances. This is a little different. There's a whole lot of other factors involved. There's the lack of tourism. There's what's been a strong dollar for a number of years. Definitely there's the internet option. There's a general malaise amongst retailers that haven't perfected a digital platform combined with a bricks and mortar platform. So people, need to be a little patient. Retailers are getting it. You're starting to see retail evolve and retailers evolve into this ever-changing world we're in. And I think that things like you say, cyclical or is it a pervasive, rally cry against people shopping in stores? I don't see that at all.
So you're saying some retail investors overpaid for properties. Can we expect distress?
Well, I think that distress occurs when landlords paid for a property and we're hoping for rent growth where there is none. And where there's no rent growth, when a landlord has underwritten the acquisition of a property driven by retail, or then goes and refinances a property that's based on a higher rent or rent growth with a higher rent projection, that's where distress may come into play. And you're starting to see that a little bit more now than you have in the past when New York has had a downturn and then has come back strong.
Is it going to be like 2008, 2009?
I think, in 2008, 2009, landlords hung on. Mm-hmm. So there might have been some distress and some workouts with lenders, but they hung on, and the market came back. This time it might take a little bit longer.
So if you're saying that downtown is mostly cyclical, 5, 10 years from now, do you expect rents to be much higher than they are today across the city?
Well,
Or is there some sort of leveling
well,
off
no,
that we're
everything's
seeing?
relative. There can be rent growth in any market as long as the starting rent is reasonable. So you can take New York City, the boroughs, the whole country and say, could there be rent growth in certain neighborhoods? The answer is yes, if the starting rent is a rent that the tenant can live with based on their projections of revenue.
Mm-hmm. So to put that question differently, I think Nike signed a lease last year at 650 Fifth Avenue for what was reported is $35 million per year in rent, which sounds like a lot. Is that the peak? Is that the pinnacle? Are we never going to get beyond that?
No, I do believe we can get beyond that. I think there's opportunities on Fifth Avenue and in Times Square and maybe even in other parts of New York where the showcasing effect or the flagship store is always going to be necessary. And those stores will always want to be in the most high-profile locations. And in those locations, with the right starting rent, you can definitely expect rent growth in the next 5 or 6 years.
Let's talk about restaurants and coffee shops. So brokers would always say that whatever may be ailing other parts of retail, restaurants are sort of exempt from because people always want to eat. There's always people moving to New York City. There's always demand for it. And yet recently we've seen a lot of old restaurants close down, some of them citing rising rents. Should we be concerned about the restaurant sector at all?
In New York City, food is a niche that is ever expanding. So there are always new restaurants, and yes, as a casualty of a changing market, older restaurants may close down. And it could be because of the rent. It could be because of the anticipated rise in minimum wage. There could be other mitigating factors like sales tax. So it is more expensive to operate in New York, yet when people visit New York, people who live in New York, everybody wants to go out to eat. So I think some of the places you're seeing some dips is perhaps lunch business is not as great, where more and more people are eating at their desks, or companies like Google are providing gourmet cafeterias for their employees. So you definitely have some competition in the lunch business. But in terms of the QSR, the quick serve restaurants where people grab and go, in terms of coffee and juice, in terms of food itself, New York is still the epicenter of the world, without a doubt.
So let's talk about fitness and wellness. What's the story there?
We're a more healthy, health-conscious society, and people are more interested in eating healthy and still at a value proposition. So strong business by supermarkets. You've seen the proliferation of both Whole Foods to Trader Joe's to local markets. And people are still not just the online business has not put a dent in people shopping in supermarkets. It hasn't put a dent in quick serve restaurants, going out to restaurants. These are all things you can't do online. Same thing with wellness and fitness. You can't get healthy just sitting at home playing with your laptop and binge watching Game of Thrones. You got to get out to the gym. You got to go to your SoulCycle class. You got to drink your green juice, and then have your traceable salad for lunch. And then, like most New Yorkers do, they probably don't cook at home and they go out to eat.
Well, we're on the subject of healthy eating, wellness. What do you make of Amazon's acquisition of Whole Foods?
Brilliant. Brilliant. The Amazon acquisition of Whole Foods is the poster child for the merger of internet shopping and bricks and mortar.
So what does that mean in practice for New York City retail market? What's going to change?
Well, I think that Amazon takes a long-term view in everything they do. So this integration may take years, but already they're in close to 500 retail outlets that Amazon now owns.
You mentioned that some of these are pop-up stores. This is always going to be sort of a gimmick, a temporary thing where a company like Snap will open one location for maybe a year or two, and then once the marketing effect is over, they'll move out again. Or do you think this is going to be a more permanent thing?
I think right now you're seeing many owners, we talked before about distress. I wouldn't say it's necessarily linked to a sign of distress, but there could be an asking rent for retail space and a taking rent that a landlord has in mind. Yet to do a pop-up store, they'll take considerably less rent. What it does is it enlivens the space. It makes it show how shoppable the space can be with a pop-up tenant in the space. And oftentimes companies like a Snap or a Google and more traditional retailers in the past, you would see Oakley open an eyeglass store as a pop-up on Fifth Avenue in Flatiron or in Times Square, they ultimately do so well that they want to commit to a long-term lease. So yes, a trend might be consumer-based product-related stores doing pop-ups, dipping their toe in the water, and getting a feel for what retailing is like. And once, if that's a success, they want to extend their lease or they want to relocate where they can have a long-term opportunity.
Are we seeing a general trend towards more flexible, pre-built arrangements in retail? We're seeing something similar in office and apartments. Is that happening here too?
Yeah, in retail today, I think that you're seeing more landlords trying to entice tenants with landlords are willing to build out spaces, in some cases turnkey, which would mean literally move-in condition, air conditioning, bathrooms, lighting, fixtures, sprinklers. A lot of work that used to be on the tenant is now on the landlord. The landlord needs to do that work to try to get the rent that they've penciled in for the space. So yes, you are seeing more cash contributions, in some instances more free rent as contribution, and in some instances landlords literally building out space for retailers. More and more common than ever.
And this rise in concessions and TIs, is that a temporary phenomenon or is it here to stay?
I think we've kind of morphed into where it's almost like the new normal. I would say landlords used to have to roll up their sleeves to make a deal. Now it's like they have to strip down to their skivvies to make a deal. And anything it takes, landlords are prepared. They're very smart people and they don't want vacant space.
So let's talk about some neighborhoods. You have a couple of listings on Madison Avenue. We did a story just last week about a vacancy epidemic on the Upper East Side. What's going on there?
You know, on the Upper East Side, you've seen a lot of store closings. Like Gracious Home was occupying probably 40,000 feet on the Upper East Side, and today it's vacant. A lot of these buildings are in co-ops, and it's time for those spaces to cater to the neighborhood. What the co-op boards would like to see, and people that live on the Upper East Side would like to see, is a lot more service-oriented businesses, perhaps fitness, perhaps wellness, perhaps more food offerings. But the truth is, you know, the Upper East Side is definitely ripe for absorption now that the rents are coming down. And yes, many of the landlords pay too much for some of the properties. And many of the tenants are not able to do the volume to sustain or have the ability to pay that rent. So there's a lot of rent renegotiations going on with rent concessions where the landlord does not want to get the space back. They want to work with the tenant so that they can stay in business. So there might be some sort of an accommodation made with a reduction in rent for a number of years, only for the landlord to have the ability to claw back and get that discounted rent back after, let's say, 2-3 years.
Your competitor Norman Barber said last year, and I quote, "I discourage all brokers in my office to work in retail unless they have an exclusive." His point was, it's a difficult market, small vacancies, deals moving more slowly. Why would you want to be a retail broker?
Who said that?
Norman Barber.
I didn't even know he was in the retail leasing business. So if he thinks he is, then he probably should stay out of it and can't give advice to retail brokers. If I was a broker today entering the market, I would see it as a world of opportunity. When I'm a broker and I'm working in what let's call a landlord's market, where the landlord has 5 offers for every space, maybe I represent one of those tenants, then my odds are pretty limited in terms of, am I going to be the broker that makes that deal? In a soft market or a tenants market, imagine if we have relationships with tenants that are expansion minded, they can now go in and take advantage of a softening retail real estate market and get into spaces they never dreamed they could afford and be successful. That's why RKF is seeing such an increase in volume.
But I guess the key here is you need to have these relationships, you need to have these clients. If you don't, I mean...
Well, if I didn't have those relationships, I'd be in the wrong business. So our business is all about relationships. I've been doing this, RKF started in 1998, and I was doing it for about 10 years before that. So those relationships that not just I've cultivated, but my partners and my brokers have cultivated are extremely strong. And having those relationships and tenants being loyal and us as brokers being loyal to the tenants, and bringing our objective approach to a retail expansion strategy, I think tenants are really embracing. And we're not just in it for one deal, we're in it for the long haul. Therefore, we're in it for a long-term relationship.
What do you do to maintain these relationships? I mean, apart from doing good work and getting them in the right space and all that, do you wine and dine them? Do you take them on trips?
You know,
What's your
I
strategy?
don't think there's any secret that brokers wine and dine clients. They might wine and dine landlords. They might wine and dine tenants. But today I think that being honest and being open about the realities of the market and always making sure the tenant knows that you will never let a deal collapse because of you as the broker has become an impediment to the deal. You as the broker has to get the tenant to trust that you are going to be fighting for them to get them the best real estate deal possible. That's how you develop long-term tenant relationships.
No, but I mean, the issue of conflicts of interest has been brought up quite a bit, right? I mean, if you represent a tenant, you might still want to have a good relationship with the landlord. Is that an issue in the business?
You know, it's an issue that we tap dance around all the time. All right, where fiduciary responsibility is to a tenant, there's always that odd moment where, well, who pays you? Well, the landlord pays you. So you represent the tenant, but the landlord's paying you the commission, right? So your responsibility when representing a tenant is to the tenant. When you're representing a landlord exclusively, your fiduciary responsibility is to that landlord. And you need to do everything as the landlord's rep to get the best credit, the best rent, the best tenant for the property. So we don't run into too many conflicts. As a matter of fact, when we represent landlords, we're often the broker that represents the tenant too. Has not created a conflict for us.
Let's talk about vertical malls. So related companies did it years ago at Time Warner Center. Now they're doing it at Hudson Yards. Kushner Companies reportedly wants to do it at 666 Fifth Avenue. Does the concept make sense nowadays? Can you make money with a vertical mall?
Well, vertical retail in New York, as in terms of the word mall, was never successful, and everybody thought it could never work in New York. But then came along Time Warner Center and proved everybody wrong, where you have 4 or 5 levels of retail that is doing sales of over $1,500 a foot. So Time Warner has sort of flipped that concept of vertical retail doesn't work in New York upside down, and it works. The Hudson Yards will be Time Warner Center on steroids in a city within a city. And I think that type of tenancy, the co-tenancy between office, residential, and retail will be a huge success.
Mm-hmm. So you would encourage Kushner Companies?
I would look at 666 Fifth as one of the greatest locations in the world for retail. So if the owners of 666 Fifth, if it's Kushner and Vornado have a plan that works for retail, I can't think of a better location to do it.
Another big trend is food courts. The South Street Seaport is one of your assignments.
Right.
We're seeing more and more of them. How far can this trend go? I mean, at what point are we going to say there's too many food courts, we have to stop doing this?
Okay, so food court sounds like a mall, right? That sounds like a Taco Bell and a Kentucky Fried Chicken and a Pizza Hut. Today we're talking about food halls, where there's an experience and there's a theme in some instances. Like Italy is again, a great example of a themed food hall. So you are starting to see more and more of them.
Still, are there too many at some point? I mean, in downtown Brooklyn, there's one on every block.
Well, you mean DeKalb Market and
Gotham Market?
No, I think that this multiple offering of different tastes from around the world is something that we've probably lagged behind other countries as far as that goes. You know, the whole looking at hawker markets in Singapore and even Pike Place Market in Seattle, you know, we're sort of behind the trend. So I think that New York is really coming into its own as far as, you know, just the whole food experience. And so I think you're going to see markets, organic food, traceable food, sit-down restaurants, experiential, you know, opportunities in the food world. You know, I really think we're in the early stages. We're in the early innings of what's going to be a very long continued growth in that industry.